Hello students, today we shall discuss about the importance of costing, cost control, the methods and classification of costing. What is costing? Costing can be defined as the process of determining how much it costs to produce and sell a product or a service. It is very important as the cost of a product can decide its profit or loss. There are two costs involved in determining the cost of a product or a service, that is, direct costing and indirect costing. The direct costing is the cost of those items that become a part of the end product and are known as direct costs, such as the raw materials, labor, packing materials, etc. Whereas indirect costs are all the expenses incurred in running a business, and that which cannot be directly identified with the end product are indirect costs. To get a better understanding of this concept, let me give you an illustration. There is a person called Mr. Ramesh, and he is processing mangoes for a pickle manufacturer who subcontracts the work. When he has orders for processing less than 5,000 kgs of mangoes, the pickle manufacturer provides raw mangoes, but all the other inputs and expenses are the responsibility of Mr. Ramesh. In order to process 200 kgs of mangoes, he needs spices and oil costing around 400 and fuel costing around 100 rupees. In addition, he pays rupees 200 to the workers who work for 8 hours processing 200 kgs of mangoes. Now the question is how to calculate the price that he must quote per kg of processing to the pickle manufacturer if he decides to earn a minimum of rupees 20 per kg for himself. So the correct solution for this is, now let us put on the cost for all the things. Now the cost for processing 200 kgs, that is for spices and oil, is 400, fuel is 100 and labor is 200, which comes to around 700 rupees. Now he wants to earn 20 rupees per kg. Hence for 200 kgs, targeted earning is 4,000, that is 200 into 20. Therefore, he must quote rupees 700 plus 4,000, which is around 4,700 rupees for 200 kgs, so that he can get a profit of 23 rupees 50 paisa per kg. Please note that more the price, the higher the profitability. But then proper pricing should be done so that the product finds a place in the market. Cost reduction is the way to earn more profit. Now let us see the main objectives of cost accounting. These can be classified into 5 different types. The first one is ascertainment of cost, determination of selling price, cost control and cost reduction, ascertaining the profit of each activity, and assisting management in decision making. Now let us briefly see about each of these objectives. The first one, ascertainment of cost. There are 2 methods of ascertaining costs. One is post costing and the second is continuous costing. Post costing means analysis of actual information as recorded in financial books. It is accurate and is useful in the case of cost plus contracts, where price is to be determined finally on the basis of the actual cost. Whereas continuous costing aims at collecting information about the cost as when the activity takes place, so that as soon as the job is completed, the cost of the completion would be known. This involves careful estimates being prepared of overheads. In order to be of any use, costing must be a continuous process. Costs ascertained by these 2 methods may be compared with the standard costs, which are the target figures already compiled on the basis of experience and experiments. The second objective is determination of selling price. Though the selling price of a product is influenced by market conditions, which are beyond the control of any business, it is still possible to determine the selling price within the market constraints. For this purpose, it is necessary to rely upon cost data supplied by cost accountants. The third objective is cost control and cost reduction. The definition for cost control is the guidance and regulation by executive action of the cost of operating an undertaking. The word guidance indicates a goal or a target to be guided. Regulation indicates taking action where there is a deviation from what is laid down. Executive action denotes action to regulate must be initiated by the executors, that is, the persons responsible for carrying out the job or the operation. And all this is to be exercised through modern methods of costing in respect of expenses incurred in operating an undertaking. To exercise cost control broadly speaking, the following steps can be observed. First, to determine clearly the objective, that is, predetermine the desired results. The second is to measure the actual performance and investigate into the causes of failure to perform according to the plan. And finally, institute corrective action. The target cost or the targets of performance should be laid down in respect to each department or operation, and these targets should be related to individuals who by their action control the actual and bring them into line with the targets. Actual cost of performance should be measured in the same manner in which the targets are set up. That is, if the targets are set up operation wise, then actual cost should also be collected operation wise and not cost center or department wise, as this would make comparison very difficult. Cost reduction may be defined as the achievement of real and permanent reduction in the unit cost of goods manufactured or services rendered without impairing their suitability for the use intended or diminution in the quality of the product. Cost reduction should not be confused with cost control. Cost saving could be temporary affair and may be at the cost of quality. Cost reduction implies the retention of essential characteristics and quality of the product, and thus it must be confined to permanent and genuine savings in the cost of manufacture, administration, distribution and selling brought about by the elimination of wasteful and inessential elements from the design of the product and from the techniques carried out in the connection therewith. In other words, the essential characteristics and quality of the products are retained through improved methods and techniques, and thereby a permanent reduction in unit cost is achieved. The definition of cost reduction does not, however, include reduction in expenditure arising from the reduction in taxation or similar government action or the effect of price agreements. The threefold assumptions involved in definition of cost reduction may be summarized as: there is a saving in unit cost, such a saving is a permanent nature, and the utility and quality of goods and services remain unaffected if not improved. Ascertaining the profit of each activity. The profit of any activity can be ascertained by matching the cost with the revenue of that activity. The purpose under this step is to determine costing profit or loss of any activity on an objective basis. The next objective is assisting management in decision making. We all know decision making is defined as a process of selecting a course of action out of two or more alternative courses. For making a choice between different courses of action, it is necessary to make a comparison of the outcomes, which will be arrived under different alternatives. Such a comparison has only been made possible with the help of cost accounting information. Now let us understand what we mean by food cost control. We all know control is a process by which the managers attempt to direct, regulate and restrain the actions of people in order to achieve goals. It is essential in the area of food and other costs because of the many ways in which loss is possible at each stage in a catering operation. Control may be exercised in many ways. through selection of techniques and devices suitable for each establishment. The techniques available to a manager are establishing standards and procedures, setting examples, observing and correcting employee actions, preparing performance records, reports and budgets. The process by which costs are regulated and excessive expenditure guarded against is known as the cost control. It is a continuous process at every stage of catering cycle. The food cost in any catering establishment, whatever its size, varies between 40 to 60% of the total sales, depending on the nature of the organization. These costs need to be controlled because of them will depend the amount of the profit. Food is subjected to losses in many ways as it passes through the production and service cycle. The diligent control of these losses therefore mean control of money lost and hence determines the viability of food service organization. Now let us see what is the methodology of food cost control. The development of an effective system of food cost control resolves itself into three distinct phases: Phase 1, Phase 2 and Phase 3. Phase 1 consists of basic policy decision in relation to the financial and catering policies of the establishment. Phase 2 consists of necessary routine operation, controls revolving around the catering cycle. And Phase 3 consists of what may be described as control after the event or post-operational control. The various methods in controlling food costs are like ordering perishable foods in quantities for immediate use in preparation and service, ordering semi or non-perishable in quantities which can be turned over fast enough to prevent spoilage, closed supervision and regular checks at strategic points in the catering cycle, using modular equipment for storage, preparation and service so that the portions are not lost in transferring food from one place to the other, portioning in the kitchen and recording the number of portions before sending them for service and then recording the numbers that are returned back to the kitchen, offering incentive scheme to the staff for achieving sales targets at established gross profit margins, developing lists of consumers' favorites through kitchen, service and sale analysis, then utilizing these to plan imaginative and profitable menus, forecasting the quantities of each menu item that will sell so that excess leftovers are avoided, developing staff initiative and creativity by inviting their participation in forecasting and planning activities, investing on equipments which will save time of staff on routine jobs so that they can use their initiative better in meal production and food presentation, using standardized simple recipes from which portions can be clearly identified, substituting low-cost ingredients for those which are very expensive, some of them may be out of stock or rarely used, and finally maintaining control accounts to enable periodic assessments of profitability and efficiency. Such assessments help to pinpoint areas at variance with the expected results so that the corrective action can be taken in time. Now let us see what are the different methods of costing. The term method of costing refers to cost ascertainment. Different methods of costing for different industries depend upon the production activities and the nature of the business. For these costing methods can be grouped into two broad categories: job costing and process costing. Job costing is also termed as specific order costing or terminal costing. In this, the costs are collected and accumulated according to the jobs, contracts, products or work orders. Each job is treated as a separate entity for the purpose of costing. The material and labor costs are compiled through the respective abstracts and overheads are charged on predetermined basis to arrive at the total cost. Job costing can be further classified into contract, cost plus contract and batch costing. Now let us see what are these three types. Contract costing is a method of costing which is applicable where the job work is big, like a contract work of a building. Under this method, costs are collected according to each contract work. Contract costing is also termed as terminal costing, and the principles of job costing are applied in this. The second one is cost plus contract. These contracts provide for the payment by the contracted of the actual cost of the manufacture plus a stipulated profit. The profit to be added to the cost, and it may be a fixed amount or it may be a stipulated percentage of cost. These contracts are generated or generally entered into when at the time of undertaking any work. It is not possible to estimate its costs and reasonable accuracy due to unstable condition of the material, labor, or when the work is spread over a long period of time, and the prices of materials, rates of labor are liable to fluctuate. The next one is batch costing. It is a lot similar. Units which comprise the batch may be used as a cost unit for ascertainment of cost. Separate cost sheet is maintained for each batch by assigning a batch number. Cost per unit of product is determined by dividing the cost of the batch by the number of units of the batch. The second one is process costing. This method refers to continuous operation or a continuous process costing. This method is applicable where goods or services pass through different processes to be converted into the finished good. Process costing is also used in cement industries, sugar industries, textile, chemical industries, etc. There are some important variants of process costing system. The first one is operation costing. This is mainly concerned with the determination of the cost of each operation rather than the process. It offers scope for computation of unit operation cost at the end of each operation by dividing the total operation cost by the total output of the units. The second is operating costing. It is also termed as service costing. It is similar to process costing and it is used in service industries. This method is suitable for concerns rendering services, for example, transport, hospitals, hotels, canteens, etc. The third is output costing. It is also called as unit or single costing. This method is applicable where a concern undertakes mass and continuous production of single unit or 2 or 3 types of similar products or different grades of the same products. Under this method, cost per unit is measured by dividing the total cost by the number of units produced. Output costing is used in industries like cement, pencils, etc. The next is multiple costing. This method of costing means combination of 2 or more methods of costing like operation and output costing. Under this method, the cost of different sections of production are combined after finding out the cost of each and every part manufactured. This method of costing is suitable for the industries manufacturing motor cars, engines, aircraft, tractors, etc. Now let us see the techniques of costing. We all know costing is the technique and process useful to allocation of expenditure, cost ascertainment, and cost control. In order to fulfill the needs of the management, it supplies necessary information to the management. There are various techniques of costing like uniform, marginal, standard, historical, and absorption costing. Now let us briefly understand these different techniques of costing. The first one is uniform costing. It is not a distinct method of costing. In fact, when several undertakings start using the same costing principles or practices, they are said to be following uniform costing. The basic idea behind uniform costing is that the different firms in an industry should adopt a common method of costing and apply uniformly the same principles and techniques for better cost, comparison and common good. The second one is marginal costing. It is a technique of costing which aims at ascertaining marginal costs, determining the effects of changes in costs, volume, price, etc. on the company's profitability. It also depends on the stability and furnishing the relevant data to the management for enabling it to take various management decisions by segregating total costs into variable and fixed costs. The third one is standard costing. It is a technique of cost accounting which compares the standard cost of each product or service with actual cost to determine the efficiency of the operation so that any remedial action may be taken immediately. Fourth one is historical costing. It is ascertainment and recording of actual costs when or after they have been incurred and was one of the first stages in the growth of the cost accountant's work. Actual costs refer to material costs, labor costs and overhead costs. And the fifth one is absorption costing. Absorption costing is also termed as full costing or orthodox costing. It is the technique that takes into account charging of all the costs, both variable and fixed costs, to operation processed or products or services. The next topic is classification of costing. Costs can be classified into various different ways depending on its nature and a specific purpose. There are various types of costs classified into logical grouping. These groups are such that each and every item of cost can be classified. These classifications of costs make the cost information meaningful. It is of utmost importance to the management of a manufacturing concern. It is the first step towards the decision-making process relating to costs and costing. Now let us see how they can be classified. The first is based on the nature of expense. By nature of expense, costs are classified into material, labor and expenses. The second is relation to cost object, that is traceability. This classification is based on the relation of cost element with the cost object. The classification is done into direct and indirect costs, which we have earlier studied. The basis is cause and effect relationship between cost element and cost object or traceability of cost to its cost object. The third one is functions or activities. Costs can be classified into various functions or activities into the following ways. One is production, administration, finance, selling, distribution, research and development, and finally quality check. The fourth method of classification is the behavior of costs. It is seen with respect to the change in volume. On this basis, costs are classified into fixed, variable, semi-variable. Fixed costs do not change with a small change in volume. Variable costs do change. Semi-variable costs have characteristics of both fixed and variable costs. The next one is the purpose of decision making by the management. For decision making, purpose of management, costs can be classified into various types such as opportunity, marginal, differential, relevant, imputed, normal or abnormal, avoidable or unavoidable costs. Next is production process. It's an important classification for cost accounting of different manufacturing industries. Based on the production process of the industries, it can be classified into batch, process, operating, operation, contract and joint. And the final one is time period. Based on a time period of assessment or any other specific purpose, costs can be classified into historical costs, predetermined costs, standard and estimated costs. In conclusion, cost information is a part of basic information needed by the managers and policymakers for making decisions about how to improve the performance of any institution and where to allocate the resources within or among the institutions. Without quality cost data, it is not possible to make accurate projections, improve technical efficiency, control expenditure, and enhance accountability of managers. A scientific costing system is a very important tool for managements to fulfill these needs and hence is imperative for the successful running of an institution. Thereby, cost accounting is a process of collecting, recording, classifying, analyzing, summarizing, allocating and evaluating various alternative courses of action and control of costs. Its goal is to advise the management on the most appropriate course of action based on the cost efficiency and capability. Cost accounting provides the detailed cost information that the management needs to control current operations and plan for the future.